First item of business would be request for bill introductions.
Here we go. It's a challenge. Yeah, they heard. They were outside waiting.
Do we have any requests for bill introductions? Representative Awerkamp.
Thank you, Mr. Chairman. Request introduction of RS 3460. And it's just a bill concerning taxation, kind of a package deal, similar to, say, 2284, but with a little twist on it.
Committee, any questions? Representative Helgerson.
Are you raising taxes or reducing them?
Any serious questions? Any objection? Seeing none, the request is approved. Any further requests for bill introductions? I have one to request on behalf of the Marshall County Board of County Commissioners. It is RS 3404. This is a sales tax authority for their county. Any questions or objection? Seeing none, the request is approved. Any final requests for bill introductions? Seeing none, we'll move on to our first item of business for the day, and that is to take action on House Bill 2685, and I'll turn to the reviser for an overview on that, please.
Thank you, Mr. Chairman. House Bill 2685 would provide a sales tax exemption for all sales of tangible personal property purchased by any organization determined to be in good standing with the Secretary of State that is exempt from federal income taxation pursuant to Section 501c3 of the Federal Internal Revenue Code.
Committee, any questions for the reviser? Representative Butler. You might check your microphone. I'm not sure
about that. Thank you. This doesn't apply to the this 501c4s, 5 or 6 is just 3s, right?
Okay. Just 3s, correct. Representative Helgerson.
I can't remember the fiscal note.
Representative Sawyer has
34.4 million annually. 34.4 million.
All right, didn't go on. We don't have more 501c3s, it would go up.
I suppose potentially, but you know, they come and go. I mean, it's
okay. Thank you.
And if I remember right, and I'm not sure if Kathleen would want to come up and clarify, but we have certain 501cs that are registered. Used to be through the Secretary of State. I guess it goes through now the Attorney General's office. But there's limitations. I believe it's $10,000 if you have annual contributions of. I can't remember if it's contributions or expenses, but there's a kind of a threshold there to where you have to register. A vast majority of the 501c3s in the state are underneath that threshold. It's going to be your smaller organizations in your community that apply for that. But where they are not required to be registered with the state, they're registered with the IRS, obviously. But it's a little bit more difficult. I think Kathleen alluded to that when she spoke to the committee. It's very hard to anticipate what the fiscal note would be from them because we just don't have the data that expenditures, the income contributions at that level. Any further discussion or amendments? Representative Turner.
The fiscal, I looked at the fiscal note, didn't find that quantification. 34 million, is that because some of these 501c3s are already exempted because they've come to this committee or otherwise, right? So is that the incremental or is that, so it's 34 million on top of whatever organizations are already there? Okay.
Yes.
Thank you.
Kathleen's nodding that's the ones that we know of that we have the data that they could somewhat accurately predict. So. Representative Sanders.
Thank you, Mr. Chairman. If I could have Kathleen called up, I'd appreciate it. Can I ask her a question?
Certainly.
So Kathleen, as you're aware, last week I introduced you to a proponent when I brought the theater tax bill exemption, and she'd done some work on her own and came to the conclusion that the actual fiscal note would be closer to $16 million, perhaps less. Have you given her work any consideration?
Mr. Chairman, we did receive some information from Angela Cassette, who is, I believe, with a 501c3 organization.
She's the managing director of Music Theater in Wichita.
And she had worked with some other 501c3s to get some information as to maybe the amount of expenditures that would actually be subject to tax. We are reviewing that information at this time, but we haven't gotten through it all at this point. I think originally we had estimated around 25% of their expenditures would be subject to tax. So that's kind of what we based our estimate on. So we haven't had time at this point to review the information.
Have you looked at it at all? Does it seem like she's got a reasonable concept going?
Well, I believe that some of them are estimating around 20 to 25%. So, but they're ranging from 5% or less up to 20 to 25%.
Yeah, and she said that 41% of them are saying less than 5%. It's only 12% that are estimating 20% or more, according to our research. Thank you, Mr. Chairman.
Thank you, Kathleen. And committee, I know this is one of those, typically when we have tax bills, we have some pretty hard numbers that are estimates, but they're fairly firm estimates. I think this is one of those that might not be so confident in what those estimates look like because the data just doesn't exist. Especially with those smaller organizations that aren't registered. I'll leave it up to the committee on how they want to vote on this bill, but you know, the concept behind this bill is uniformity and to get us out of the business of kind of picking winners and losers and just kind of make a uniform policy that impacts everybody the same. But Kathleen? Yeah.
One more thing I just wanted to mention on the 34.4 million, that would be based upon if we were to allow an organization that is exempt from federal income tax pursuant to section 501c3 of the Federal Internal Revenue Code. So again, that would be language that we regularly use in some of the other sales tax exemptions for these 501c3s.
Kathleen, while you're up here, and I might direct this to Adam, Mr. Sievers, when we were hearing this bill in committee, there's a reference, I apologize, I don't have the bill pulled up in front of me, but there's a reference to in good standing with the Attorney General's office. Did we need to change that language to a little bit more broad? I did not have an amendment prepared, but I remember we talked about that, trying to just simplify that. Mr. Sievers, do you remember? I can't remember what our conversation was regarding that.
Thank you, Mr. Chairman. Yes, there was some discussion, I believe, about just removing the determined to be in good standing with the Secretary of State and just leaving it as for those entities that are exempt from federal internal taxation, income taxation, just because there are certain exclusions from entities that have to register with the state.
Okay. We might have to have a conceptual on that. Okay, yeah. He read my mind. He already has an amendment prepared. Any further questions for Kathleen while she's up here? Representative Miller, and welcome to Tax Committee. Welcome back, I should say.
Thank you, Mr. Chairman. And I apologize because I'm playing catch up here, but I've tried to carefully read through this fiscal note. Where does this $34 million figure come from? There's no dollar figure in the fiscal note.
I might allow Kathleen to address that.
Based upon the way the bill reads at this point, we weren't able to provide an estimate.
You were or were not?
We were not able to, but if we were to change it to say that we will allow an exemption for all organizations that are under Section 501c3 of the Federal Internal Revenue Code, then we would estimate that to be the 34.4 million. So we would word the language similarly to how other sales tax exemptions are worded for some of the other 501c3 organizations in the statute already.
And would that figure just be for SGF, or does that also include state highway fund?
That is the total funds. So SGF would be around 28.6 and state highway fund 5.8.
And then more for local government?
It would affect local government as well, and we did not estimate that.
Thank you, Mr. Chairman. Thank you, Kathleen.
Any further questions for, yes, Representative Helgerson?
When we had the discussion before, I made the comment that the department now provides a letter, I think it's a letter, that all taxes are paid, and that might be helpful to have. You could comment on that?
So I think what you're suggesting is that they would have a tax clearance request before we would issue a tax exempt entity certificate of some sort, which would say that they are in good standing with the Department of Revenue, that they don't owe any taxes.
Would this be one time or would this be annual?
That is entirely up to you. As a policy perspective, the tax exempt entities that we issue right now are at four-year terms. We review every 4 years.
Okay.
Any further questions for Kathleen? Seeing none, thank you for stepping up and taking those questions. But this time, I guess I'd like to offer my amendment, if the revisor would pass that out. This is indeed doing what we just talked about. It's striking the language regarding the Secretary of State, which is actually no longer Secretary of State, it's the Attorney General. But by striking that, it kind of takes into account as Kathleen said, it's the language that we use in all of our other 501c3 statutes. Okay, it looks like everyone's had a chance to take a look at that. Just to explain the amendment, it is just striking out that language that we need to remove. So it does, in fact, take into all 501c3s. So yeah, I'll make the motion. We have a second from Representative Epley. Any discussion on the amendment? Seeing none, all those in favor, please say aye. Aye. Opposed, no. Motion carries. We're back on the bill. Representative Helgerson, did you want to propose a conceptual amendment to this? Or, because I think you have a good idea. I just want to make sure everybody understands it and didn't know if you wanted to propose that as an amendment.
I think the only taxes we're exempting them from all sales tax. So that's the one part that would be, they wouldn't have to worry about. It's whether or not there's any property taxes or anything else. And I guess I'd like to get something written and see how the department feels about it. So if the bill goes to the floor, I'll take something down there for clarification.
Okay. I would consider that a friendly amendment.
I don't want to use my friendly amendment on this one. I'd rather use
That one might not be so friendly. We'll see. Okay. Any further discussion? Yeah. Representative Bergkamp.
Thank you, Mr. Chairman. I definitely appreciate the intent, I think, of this bill, because I do agree. I think there's winners and losers spread out across the state right now, which is never a good thing. However, I'm always a little bit hesitant to kind of do a blanket exemption, because I think when I look at the 501c3 definition, that maybe there's certain buckets that I feel definitely help and are well deserved, but I think there's maybe others that go beyond what I'm comfortable with. So I'm a little bit torn on, I think maybe overall more good than bad, but still a little bit undecided how I'll do on this. Thank you.
So you're not volunteering to carry this bill on the floor?
I'll find somebody.
Okay. Representative Sanders.
Thank you, Mr. Chairman. I'd like to point out in this research that a proponent of the theater bill did. She makes the point that a lot of 501c3s are looking for help. And in some cases, they can't find help, but in other cases, they don't have the budget. So a lot of the savings that they get from this, should it pass, would be rolled back into hiring workforce, thus creating more taxpayers, thus making it even more impossible to know what the impact of this would be, because we'd have more taxpayers created if this were to pass.
Seeing no further discussion, Representative Turner.
Thank you, Mr. Chair. I guess my question's separate, but to the previous comment, I guess there's still taxes that get left for others that are still in the bucket to pay that would be counter. So we would all like to keep our tax dollars, but anyway, the question is, it looks like this came out of an interim committee discussion, and I'm just wondering what was talked about. I didn't remember it in testimony in terms of, do other states, is this typical practice in surrounding states? I'm just curious where the idea got its origin. Thank you.
Well, you can blame me for the origin of the idea. Originally, when I introduced this as a topic, I had actually created a mechanism that was a fee-funded mechanism. If they wanted to apply for this, everybody had the opportunity to do so. And I was going to set up a fee that was based on their Form 990, their contributions that they receive. Ultimately, that seemed like a very complicated process, and we decided to eliminate the fee part of that to kind of help offset the revenue loss. But I don't know of any other state that does a blanket. The 501c3 is an income tax exemption at the federal level. So it doesn't necessarily pertain to sales tax, but it's been our history here that typically a lot of these organizations that do good charitable work that come in and request the specific sales tax exemptions are 501c3s. So this was really an attempt to provide that same benefit to a lot of these smaller organizations that may not have the means to come in and ask for a sales tax exemption that would maybe only benefit them a couple $100, but it still allows them to do more work with their funds. But I've kind of tried to filibuster a little bit. I didn't know if Eddie was trying to find any other states that do something like that.
My recollection is we looked briefly at that as part of the preparation for the interim committee work and found that it was too piecemeal to even effectively describe beyond that description. And so I don't have any detailed information about what any other states do.
And then I guess, thank you. So I'll take that as a no. It's not a norm amongst other states. The second one would be the concerns brought up about the local tax piece of this. The request was, hey, take the state piece, but leave the local. It sounds like that's not an option. So if we were to pass this, it also takes the local, correct?
Yes, that is correct. And if I tend not to try to dive into streamlined sales tax too much when we don't need to, because we hear that frequently. But through the streamlined sales tax, food is the only item that you're really allowed to provide different rates for. under the Streamline Act, you need to have one rate at the local level and one rate at the state level, and that's it. That's the same reason we need to either offer a full exemption on food or allow the locals to keep their revenue and set the state rate to zero. That's why we set the state rate on food to zero rather than providing a full exemption. Representative Bergkamp.
Thank you, Mr. Chairman, for a second time. And I would just be curious, just part of the discussion. So with the World Cup coming up, I know there's been a lot of talk, appropriations, et cetera. Part of the 501c3, I think, bucket is fostering national or international amateur sports competition. So I would just be curious if maybe we could have something in the bill, or just maybe research at some point, say, or any new ones created after this exemption to utilize this bill, or if there's any way to track that. I know they always talk about making Kansas the soccer capital of the world. So just a note to get it out there. Thank you.
Representative Sanders.
Thank you, Mr. Chairman. I'd like to comment on the Vice Chair's previous point, which was this bill gets us out of the business of picking winners and losers. And one of the things that I found out in my somewhat limited time up here is, there are people who know how things work in Topeka. And that's why we have quite a number of 501c3 sales tax exemptions as it is. And some people have lobbyists and they get on the list. Well, it needs to be an equal playing ground for everybody. And that's what this bill does. And also, my understanding, and Eddie might check on this for us, is that Texas and Colorado have similar legislation to this.
Committee, any further discussion? Representative Sawyer.
Yeah, I would prefer the fiscal note to be a little smaller on this, but those of us have been up here a while, it does get frustrating over the years to have all these people come up, and it's unfair. Like, I remember when we had hospices, we had a hospice coming up asking for an exemption. Well, about half the hospices in the state were already exempt, but half weren't. I mean, it's pretty unfair even within the same kind of charitable organization that we have. We don't treat them the same. So I think in fairness, we ought to come up with something that treats them fairly. This may not be the best solution, but it does treat everybody the same. And we don't have to keep going through picking winners and losers, or just those organizations that know the system or can hire lobbyists can get the exemption, and those that don't do that don't get it. So I'm going to support the bill.
Further discussion. Representative Epley.
Yeah. Thank you, Mr. Chair. After having sat through some of the same discussions that you have, and I know you've sat through many more, Mr. Chair, I can see the merit in this bill, and I think it's a bill that's ready to be passed. I think we ought to get it to the floor and let the entire House have a crack at this. I think it's past time, and I think everybody that votes against it ought to be in your chair and hear all the discussions and all the testimony that you've heard over the years, because you can't get that time back from your life. But that's why I think it's ready to go. So thank you, Mr. Chair.
Committee, any further discussion? Seeing none, do I have a motion on the bill as amended? Representative Epley.
Yes, Mr. Chair, I move that we pass out House Bill 2685 as amended. Thank you.
Motion by Representative Epley, a second by Representative Hoheisel. Barring any further discussion, all those in favor, please say aye. Aye. Opposed, no. Motion carries. Anyone wishing to be recorded? Seeing none, thank you for your attention. We will move on to our next item, and that is a hearing. You guys didn't know what we were going to do today, did you? This is House Bill 2219, and I'll turn to the reviser for an overview on that, please.
Thank you, Mr. Chairman. House Bill 2219 would allow for wagering losses to the extent allowed pursuant to the Federal Internal Revenue Code. This would be allowed as Kansas itemized deductions. Under the bill, currently, since there's a holdover bill, it would allow itemized deductions commencing in tax year 2023 and thereafter. If warranted, I do have an amendment that would update the years to 2024 since there's a holdover bill.
committee discussion or questions for the revisor? Excuse me. Okay, seeing none, discussion or amendments on the bill?
Mr. Chair, I'll run that amendment.
Okay. We'll have a motion by Representative Hoheisel. If you want to go ahead and distribute the amendment. While we're doing that, do we have a second? Second from Representative Burkamp.
Mr. Chair, would you like me to explain my amendment?
Certainly.
This just simply changes the date from 2023 to 2024. I'll stand for questions, Mr. Chairman. Yeah, as they point out, no retroactive gambling loss deductions in spite of a KU's game over the weekend.
Okay, it looks like everyone's had a copy of that. We have a question from Representative Hoffman, and welcome as well to Tax Committee.
Thank you, Mr. Chairman. I was told that I was supposed to try to live up to Corbett's corner over here. I'm not sure. He thought it was Corbett. So I was wondering, I don't see that anywhere in here, Representative Hoheisel, where it disallows you from carrying over your losses on your income tax.
I appreciate that, Representative. As I said before, this was filed on behalf of a constituent.
Representative Avery?
Representative Anderson lives in Newton, but...
Okay, we have a motion on the floor regarding the amendment. Is there any further discussion on the Hoheisel amendment? Seeing none, all those in favor, please say aye. Aye. Opposed, no. The amendment, we did have one in the negative. Motion passes. Okay, we are back on the bill. Further discussion or amendments? Going once? Sure. Okay. Representative Sawyer.
All right. Just to refresh people's memories, in Kansas right now, if you have winnings, you're subject to state income tax. But if you have losses, you don't get to deduct them. Now, up until 2012, you got to do that. If you had winnings, you got to offset them with your losses. Which only seems fair. But when we passed the 2012 tax experiment, one of the pay-fors was to get rid of this deduction. I personally don't gamble, and I don't actually like to encourage people to gamble, but I think it's only fair if somebody is gambling and we're going to tax their winnings, then we ought to let them to offset that with their losses. And by the way, you can on your federal income taxes. So I would support this.
Okay. Further discussion on the bill? Representative Turner.
Oh, well, she may be to it, but I'm trying to remember, and Representative Sawyer has a better memory. So, but all this is documented. So there are forms sent. I mean, how do you document your? I know if you win significantly, you get some paperwork. I don't know about on the loss side. I'm not sure how this bill's structured. If it requires only documented losses, or if that's just
I might
like charitable contributions.
Our other resident CPA to answer that. She had a really good explanation when we had the hearing. If you'd care to.
Thank you, Mr. Chair. So losses can be documented if they have an online account, but it is not required. And for a tax preparer preparing a return, we do not have to see any kind of proof. So if you're audited, you would have to provide proof, but there's a high amount of fraud, and that's what I was just going to speak to. I have real concerns because there is no process for documenting and the fraud that I know that goes on.
Representative Hoheisel.
Thank you, Mr. Chair. And I'd point out when we did have the hearing, I believe it was Representative Kessler that was pointing out, especially in casinos, you have players cards that document your wins, your losses. They can send you a tax form on those. So there are ways, especially in, as Representative Howardson pointed out, online with sports betting that documents your total bets, your winnings and your losses as well for you. So that's another form of documentation. And all this does, again, you can itemize right now and deduct on your federal taxes already. So this just lines our state tax up, or to state tax code up with the federal tax code on this issue, and goes back to how it was as Ranking Member Sawyer said in 2012.
Representative Helgerson.
Just for a clarification then, so the feds accept the losses, is that what I'm hearing?
Yes.
And then when we went out of conformity is when we lost this.
Do you want to answer that? Okay. Yeah, I'll let Representative Sawyer address that.
You can use your losses to offset your gains. You can't have more losses than gains. And that's how the feds do it, and that's how we will go back to doing it in Kansas. That's the way we used to do it.
Okay, thank you.
Representative Howardson.
Thank you, Mr. Chair. Just to clarify, I know that you can access your losses, but it's not reported to the state or required to be reported to the state on a form. That's my understanding. That's what I would like to see on that.
Further discussion?
Was that
Representative Avercamp?
Was that an amendment she was proposing?
We'd probably have to get that one. If we run this across the floor, we could work on one at
Yeah,
that time.
Mr. Chair,
That's a little.
if I may, yeah, I'd love to work with Representative Howardson on some language on that. I think that's fair.
Okay. Representative Avercamp, you have the floor.
I think it's been answered. So it's just exempting. So it's just a deduction off of your winnings. So somebody that's just a bad gambler won't ever take advantage of it.
Yeah, if you're a KU fan, or no, excuse me. I would only know that by experience because I'm a K-State fan. So, Representative Sanders.
Just for further clarification on this, if you were to play the lottery 20 times in a year and you could somehow document that you played it 20 times and you never had a winning, you couldn't make a deduction.
That would be correct.
Okay, thank you.
And you, Mr. Chairman, if I may. And this is for only folks that actually itemize. So people that take the standard deduction will not get this. It's only for folks that itemize.
Is there any further discussion? We voted on the original amendment. If there's no further discussion, committee, I think I'd actually like to suspend this bill, allow the parties to work on some language that would provide some documentation on a form to report. I think it'd be cleaner to do that in the committee process rather than on the floor. So without objection, I think at this time we'll suspend the conversation and discussion on this bill. Seeing no objection, we'll bring this back up. By suspending it, we're going to retain the Hoheisel amendment, and when we bring it back up, it will be as amended at this point in the future. So with that, we'll move on to House Bill 2757. And I'll look to the reviser for explanation on that one, please.
Thank you, Mr. Chairman. House Bill 2757 would provide for the Adoption Saving Account Act. Commencing July 1 of 2025, individuals would be able to open with a financial institution and designate the account as an adoption savings account to be used to pay or reimburse a designated beneficiary's eligible expenses for the adoption of a child. Pursuant to the bill, the maximum contribution into an account in a tax year would be $3,000 for an individual and $6,000 for a married couple filing a joint return. The maximum amount of all contributions into the account would be $24,000 for an individual and $40,000 for a married couple filing a joint return. The maximum total amount in an account shall be $50,000. There are limitations on what the account can be used for, penalties if not used for such designated purposes. And then there'd also be a corresponding subtraction modification in the amount of not to exceed $3,000 for an individual and $6,000 for a married couple filing joint return for the amounts contributed or the amounts received as income from assets in the adoption savings account. You get the choice between the two or for the subtraction modification.
Thank you. Committee, any questions for the reviser? Representative Clayton.
And since it's been a couple of weeks since we've heard this, I didn't have a chance to ask this question in the first hearing and haven't really gotten to read this over. This does apply to anyone who is able to legally adopt in Kansas, correct? No exemptions?
We'll have the reviser continue to kind of look at that, but I don't recall any exceptions during the original discussion. So, but we'll make sure and get that question answered. While they're looking at that, is there any other questions for the reviser? Representative Turner.
So this is thank you, Mr. Chair. This is a savings account. And what if it never gets used? I forget what the what happens to the funds if they save and then never end up being able to adopt or being, I don't remember the conversation on that.
Mr. Sievers. You guys are asking good questions.
Thank you, Mr. Chairman. I was just clarifying that there is a recapture provision that would essentially pay a percentage of the amount if not used for the designated purposes of the account, which is the adoption expenses. So there would be, to draw money out of the account, you have to pay that in addition to the tax. You'd be subject to tax. There is a provision that if the account holder dies, there would not be a penalty assessed. So there's kind of a special provision if the person dies. But in that, most of the time they would be subject to a recapture amount. It'd be either 5 or 10%, depending on how long the money was in the account for.
And just if I can, are you done?
Yes.
Okay. If I could piggyback off of that question, because we have account owners, but then we also have the designated beneficiaries. The beneficiary can be changed. Is that possible? You can have an account, but then change to a different beneficiary?
That is correct. Unfortunately, I'm showing I didn't actually draft this one, so I was involved in the intricacies of it. I'm obviously familiar with the provisions, but yes, you're correct. There's an account holder, and then similar to other types of accounts, you can designate a beneficiary, but it's really the account holder is the one in charge of the money in the account, and they can change the designated beneficiaries.
Okay, committee, any further questions for the reviser? Did you find anything on the restrictions?
I think Eddie and I are in agreement that there is no limitation on who would be qualified as a account holder or some sort of limitation of who would be eligible for adoption.
All right, seeing no further questions, I'll now open it up for discussion or amendments. Seeing none. Do we have a motion on the bill? Representative Bergkamp?
Thank you, Mr. Chair. I motion we pass out HB 2757 favorably for passage.
Second from Representative Epley. Any further discussion? Representative Howerton.
I did talk to a few people. Thank you, Mr. Chair. My concern is that the adoption savings credit and then the adoption credit that they're going to be receiving after the adoption expenses would overlap, and there might be a double claiming of that. I was hoping someone would have an amendment after the discussion, so I was kind of waiting to see about that. So that would be my main concern.
Do you want to clarify that a little bit?
I haven't had time to research a lot of it. So if they get a credit, a savings credit for the money that they put into a savings account for adoption.
Correct.
And then they pull that money out and they pay for the adoption, and then they get a credit, like on the adoption credit, right? For the expenses paid, if that money overlaps. So would they, with the same amount of money, would they be getting both the savings credit and the adoption credit with the same money?
I think they would. I might turn to research or revisers to answer that and confirm, but.
Just briefly, yes, I think that is a correct statement. That I'm not sure of any exclusion that would apply. That if the account holder is also the designated beneficiary and that would expend funds from the account, could also conceivably be eligible for the adoption savings credit.
Because the adoption savings credit goes to anyone that is the account holder, may or may not be the beneficiary. The beneficiary is the one that would receive the tax credit on the adoption. Or would the account holder also be benefiting from that?
I think the instance, if you have, a separate person who is the account holder from the designated beneficiary, there would not necessarily be overlap, or it would not be, because the tax credit would go to the individuals making the adoption. It would have to be the case where the account holder is the designated beneficiary. So expending funds would then also possibly be eligible for the adoption credit.
Does that answer your question, or do you still feel like we need an amendment to clarify this?
I think we need an amendment to clarify this. I'm for both. I'm for the savings account and for the adoption credit. I don't want to, but I'm not for double dipping. Right. So that would, I just want to make sure that we're doing this right the first time.
Okay. I might entertain just same thing we did on the other bill. If we want to research this a little bit more and come back with an amendment, we'll work with you on that.
Not having the time to work this.
No, that's fine.
Before I got here today.
Okay, we'll go ahead and continue any further discussion on this. I have Representative Hoffman and then Sawyer.
Yeah, thank you, Mr. Chairman. And it's on the same line of questioning, because I think I would be more apt to support this, although I probably won't be on here when you actually come back to it. But it's much like our HSAs. If we put money into an HSA and then we pay medical expenses out of that HSA, we can't also deduct it from our income taxes on those expenses. So I think that's an important part that we do need to make sure happens in this. I think it's a great deal. I just think we don't want to get to a point where they are able to use that money and then also deduct that money as well as on their charitable contribution or on their adoption credit. So.
And just not to create any more forms, but some kind of reconciliation reporting would probably need to be done on the tax return or something, I think.
Yeah, we can work on that. Representative Sawyer.
Yeah, I was going to ask, my thing was just the logistics of what you're talking about. Because, they're very different things. I mean, this is a savings account, like an education saving, like a 529 account or an ABLE account. It works exactly the same way. So you're saving, you either have somebody else putting in money, saving money so you can help adopt, or you're putting your own money in a savings account to build up those huge expenses. I don't know why it costs so much, but what it does to adopt somebody. So you're earning that money tax-free, but it's your own money you're putting in there. The tax credit is totally different that you get afterwards. I mean, that is a tax credit. So I don't know. I mean, it seems in fairness, you shouldn't have to lose your own money, the savings part of that account. You see what I'm saying? That money was growing tax-free. So you're talking about just the tax-free portion being offset, or we're going to actually penalize people for saving up ahead of time? You understand what I'm saying?
So their tax, I guess I don't understand.
Well, this account,
because I read it as a tax credit. I apologize.
We might, if I want to, Representative Sawyer, if you don't mind, would either Eddie or Adam be willing to just explain what the savings account does and what the benefit is? Because it's my understanding that you can put the money in and it's tax-free. You get to deduct off your income, but I might.
So this bill is in essence a saving incentive. And so the taxpayer, the benefit to the taxpayer is all the way back on page 14 of the bill. And it's the very last page, the italicized language, that the taxpayer gets to subtract from their federal adjusted gross income in arriving at their Kansas adjusted gross income, either the contribution up to $6,000 for a married couple or $3,000 for an individual, or the income earnings from the assets in the account, one of the two each year. And so if they save for 3 years for this, they might deduct that all three, however many years. 3 is just a number I said. But then when it comes out of that account, that's when they would spend it, and that's when the credit would in essence apply. So when they pull it out of the account, there's no particular tax benefit there other than the credit. The tax benefit comes over the course of time that they save within the account.
Clear as mud. That technically Representative Sawyer still has the floor. Do you have any further comment?
This gets very complicated. It's not, you know what I mean? You're making people go through a very complicated calculation. I don't know.
See, we have Representative Hoffman and then Francis.
Yeah, thank you, Mr. Chairman. Yeah, and Representative Sawyer makes a good point that I may want to retract what I said before, because I may be mistaken. The actual adoption tax credit is not that is that just a set amount? If you adopt someone, then it's a set amount. It's not on the expenses of the adoption.
I might have research confirm that.
So for the adoption tax credit, the state piggybacks off of the federal adoption tax credit. The federal adoption tax credit has allowable expenses, and then it caps those. And so they have to be the actual expenses associated with the adoption. And that's a credit towards your federal tax liability. The state piggybacks off of that and allows a percentage of that federal allowed credit on your state return. And so that is in essence, it is certainly plausible, maybe even likely, that maybe even certain that most taxpayers benefiting from this would also benefit from the tax credit down the line, assuming they get all the way and successfully complete the adoption. But on this one, the tax benefit is on the savings side, not on the adoption expenditure side.
Right. And okay, but I just was trying to clarify that. So the adoption tax credit is on the expenses, it's not just a set $5,000. So okay, I still think there may be an issue there then, because if you're saving up money and you're getting a tax break as you're saving up that money, and then you spend it on the adoption, and then you're also going to get another exemption later for the credit for that. I think it's much like still the HSA, where you're saving up money to use for medical expenses, and then you cannot use that money, or you cannot get a deduction again from that. So, yeah, I think the question is still there.
Representative Francis.
So this may be for research a little bit. I mean, what kind of tax credit are we looking at on the federal level, and what percentage flows through to the state? I mean, it seems like to me we're starting to argue about cents on the dollar here, because our top tax rate is 5.7%, and that's what goes in there plus the earnings. But then when we're looking at the tax credit, that's dollar for dollar, I believe, off of their tax liability. I don't know. Seems like we may be worrying about something that's relatively marginal. So do you have any idea how that flows through, Eddie?
So the federal credit is capped at around in 2023 is $15,950 per child. Kansas allows 25% of the federal credit to flow through. But the federal credit, that's a cap. It has to be actual expenses. It's not just a fixed dollar amount. There are additional credit amounts for children with special needs adopted out of the custody of the Secretary for Children and Families. So I'm just kind of referring to the general one, but it's a 25% flow through.
25% on 15,900. Is that what you're saying? So that's
we're
something less than $4,000.
Basically at $4,000, assuming that the actual allowable expenses for purposes of the federal credit were $16,000.
And then our top marginal tax rate in Kansas is at 5.7%. Is that right?
Yeah.
So I mean, at a max, somebody puts $6,000 in there. They're not liable for 5.7% on $6,000. Yeah, I'm not sure this is a big enough number that I'm concerned about.
Representative Clayton.
Yeah, the previous speaker echoed some of my concerns about exactly, how big of a number. And I realize this committee is more of a brain committee than a heart committee. But if we recall the testimony from some of these folks, I think that Kansans who suffer from infertility are tremendously vulnerable and are up for exploitation, especially financially. And so I don't care if they triple dip. This is an opportunity for us to reward people who are doing a truly selfless act. So I'm here for it.
Representative Francis.
And just to add on to what the previous speaker said, I've had some friends that have adopted at-risk kids in the past, and I know there's a wide variety of the children that are adopted, but you're right. Whatever they get, it's a selfless act.
Further discussion, committee? Committee, in light of the conversation, I think we'll go ahead and have a vote on this. If the vote doesn't turn out the way I think it does, we can have a motion to reconsider and maybe take this back to the drawing board. But at this point, I'd entertain any further discussion or a motion on the bill. Oh, we do have a motion. My pardon. Okay. Representative Helgerson. No. Okay. Yeah, we did have a motion. Yeah. Okay. Yeah, we do have a motion on the table. So if there's no further discussion, all those in favor, please signify by saying aye. Aye. Opposed, no. Motion carries. Committee, that does conclude our business for the day. Thank you for the robust discussion. I appreciate everybody's thought, and we are a good working committee.